Hello, everybody. Welcome to Thursday. The S&P 500 was down almost 1.8% today. Pretty negative day altogether, just from the get-go, continued down. Obviously, some worries about the tariffs. Interestingly, though, it didn't really respond positively to the news that was put out here in this, kind of the middle of the trading day, that Trump had decided that they were not going to have tariffs on the goods that are part of the new NAFTA agreement, USMCA, I believe is what it's called. And so there's zero tariffs on those, includes autos and what have you too. So it's a pretty big deal because that still allows commerce to happen between, these three countries, and to be more efficient, to put places, to have things made in places that are a little bit less expensive and what have you. And also, it was announced today that the tariffs on Mexico would be delayed another month after the meeting that they had with the Mexican president. So, things are moving along in the right direction. Market didn't respond positively to that today. I think it's just kind of, all the chaos coming together with all the different things, and is not really helping the market. It's not really helping CEOs decide what to do with their future projects and those types of things. It's not helping consumers. Consumer sentiment survey was negative in January as these things were developing. So sentiment surveys and a lot of these different things are operating around, the fear of what might happen. So it is important to consider that we don't have, tariffs that are staying very long so far. So, maybe they do. China's haven't moved much, but who knows what's going to happen there. The tariffs that were on Canada, the ones that really matter, were part of this, agreement. There's still zero tariffs on those. And so, we'll see how this plays out as far as that goes. And that's the issue here, is just looking at kind of, okay, what's real and what's, not. Now, there's enough chaos and enough disappointment and enough consumers, being worried, and enough businesses being worried, I think, to have some impact already. And we're going to probably feel that as part of this, as far as that goes. Although those things can disappear pretty quickly if we just get to a spot where things are a bit more calm. It's going to take the administration deciding that that's what they want to do, that they really want to try to help the market. That hasn't been true so far. They seem to be okay. I do believe there's some point in time where they'll start to look at the market and say, okay, we have to do something different. But I don't believe that, being down 5, 6, 7% is really going to be that point where they decide that this is the time to make a difference. So I suspect we'll continue to see some volatility as far as that goes. We might see some dip buying coming in, at different periods of time, because it's, again, it's not a structural situation. So I mentioned this yesterday. I think it's really important. We have structural downturns that are, nobody can just decide to change their mind and turn those things around like 2008. This is a downturn that's based on a decision with tariffs. I repeat this again because I think it's really important. And so, they can change their mind and turn this around. Now, you go too far down the road, all of a sudden you got structural issues, because what's happening is we were putting a lot of pressure on the system as a whole, putting pressure on the economy, and that's when things can kind of break and things can kind of go south for different companies. I mean, it's essentially what happened in 2008. Lots of pressure coming in because the economy was slowing down a lot. And then all of a sudden, Lehman Brothers failed. And that was the real big downturn. We were down about 22%, I think. And then Lehman Brothers failed. We dropped another 30% after that. So, those things are dangerous situations that happen when like they did in 2022, when they're raising rates that much. You worry about what might break in that scenario. And so they have to be a little bit careful here with these tariffs and playing around with these different, concepts, that they don't break something. And so we'll see how that plays out as far as that goes. So I think this is something to watch day by day. Again, we're seeing rotation in our portfolio into international investing, which has done better. A lot of it was down a little bit today, but down a lot less than the U.S. Piece, of course. And, consumer staples and things like that are usually do quite well, on a relative basis in these downturns, as far as that goes. You will often see long-term treasuries doing well if the market falls apart. We saw that in the 2020 downturn. Hasn't happened a lot yet because there's probably some fear of inflation too, as far as that goes. But there's different places to go. Eventually, as the market truly shows its colors and we start to change direction, primary direction, you really want to stay in some type of stock and bond market participation, depending on the market you're looking at, as long as it's in a primary upturn. When it gets into a primary downturn, you've got to look at becoming more defensive, because now, all of these highs are lower and lower and lower, that's a primary downturn. So we're a couple of warning signs for that so far. Again, the first time we've had a lower low since October 13th of 2022. So that's something. But 50-day moving average is still quite a bit above the 200-day moving average. We've had a really good run here in the stock market. So let's see how it goes. Look forward to being able to talk to you tomorrow. We have the show tomorrow. We'll do a little summary of what I saw happening with the markets. And again, Talk Money with Tom on YouTube from 12:15 to 1. You can put in questions if you have questions live. We can try to answer those. So look forward to seeing you then. Thank you.